and looking for a program that could help individuals that don't qualify any other way, and that could still come in with a low down payment, 3.5. I came across an earned equity program, and initially I would not service the program because there's a company that has the loan, but they'll do sort of like a wraparound. Well, they'll service the loan and they'll lend the individual the same amount what they purchased for. They just have to come in with 3.5% down. I present it to individuals as a loan because most people don't qualify for a loan because their income is too low, because they don't report enough income is what it is most of the time, because they're self-employed, because they're 1099, or because they don't report taxes to the IRS, or a lot of individuals that earn cash and they don't report all their cash. And I tell people it might not be for everybody, but it's a great program that offers an opportunity that to everybody that is not able to qualify any other way. So that's not the first product we go to. That may be the last product we go to. But in order to get there, I want to make sure that there's nothing else available.
Welcome to another episode of Pick Up the Phone Podcast. I am your host, Josue Llanas. I am the founder of GetYou.ai, the AI sales software. Today's guest is Josue Reyes. Josue Reyes is a family man, mortgage loan originator, 100 loans a year, $3 million a month in production. So, man, thank you so much for being here, man.
I'm happy to be here.
Yeah,
thanks for the invite.
Absolutely. We're gonna run right into it. This will probably be a little shorter of a podcast, but we'll try to bring as much value as possible for the people watching at home. Sound good?
Sounds good.
Cool, man. So, anytime that I bring people on here, I always start, like, what's your story? Where are you from? Where were you born? Where'd you go to school? Just give me the background on who is Josue Reyes.
Josue Reyes. I was born in El Salvador.
Okay.
I migrated to Los Angeles at the age of 7.
Nice.
So I grew up in South Central LA.
Yeah.
Yes, I graduated in Los Angeles as well. I went to El Camino Community College, and I was actually looking to go into nursing. I liked the medical field, and I was intrigued with anesthesiology. But going into the field, I early on realized it wasn't for me. I do like helping. But being of service is something that I enjoy doing. However, I couldn't deal with other individuals' pain. So that wasn't something that I enjoyed. So then early on, I moved into business,
Okay.
and then in looking to buy a house at a young age, because I did everything real young. I married real young. I had a family real young.
How old were you when you got married?
I was like 20.
You're 20? Yeah, that's young. How old were you when you had your first kid?
21.
You got to it.
Yeah. And I think I was 22 when I bought my first home.
Wow. You did everything fast.
Everything real fast. Yes, definitely.
So in the process of you looking for a property, you were like, okay, I think I like the real estate field.
Most definitely. But it was mostly because when I was looking to get approved for a loan, there was no one that would help. It was really hard. Everybody would just wanted me to fill out an application, send your documentation, and then I wouldn't hear from them. So in trying to get help, I was getting denied, but I wasn't being told why I was being denied. And finally, after knocking on doors, I kept asking, like, what do I need to do? Like, yes, you've told me I don't qualify, but what is it that I need to do to be able to qualify for a loan? And that, I think that was my third loan officer that I went to. This person told me, hey, you need to raise your credit a little more. You need to save for down payment. You may need a co-signer and, or additional income. And that's what, within 3 months, I was able to do all of that. And I was able to buy my first home. And seeing the process and seeing the need for information, and especially people in my Latino community that don't speak the language, that don't have the resources that sometimes are afraid to look for more information and to ask the right questions. That got me intrigued and gave me that interest to pursue mortgages and real estate.
Yeah. Wow. So you bought your first house at 2022. Were you still pursuing a career in medical at the time, or how did you get the capital to be able to buy the house? What kind of
Well,
career?
I was working at a factory actually. I was like a, I don't know, like a supervisor at a manufacturer, like a shipping and receiving department.
Okay.
And so I did have an income and I was already paying rent.
Yeah.
So I felt like if I can already pay rent,
Hmm.
why can't I buy a house?
Right.
And fortunately, at the time, there was affordable homes in Los Angeles.
Yeah.
Now, not anymore, but
No.
at the time, there was. And I think at the time, I think I was paying like 1,200 in rent, and my mortgage was like 1,600. So it wasn't a huge increase of my payment.
Mhm.
And I just made it work. I
Yeah.
did whatever I had to do to either earn more money or work extra hours to make it happen. And
Yeah.
and and like a lot of us in our community, we do what we have to do
Yeah.
for that American dream.
Absolutely, man. That's incredible. It's a great story. So you were born in El Salvador,
Yes, sir.
and then your family immigrated to Los Angeles.
Yes.
How old were you when
Seven.
you were 7?
Yeah.
You're young, man.
I was a baby.
Yeah, actually chasing the American dream, huh?
Yeah, yeah, most definitely.
That's amazing. That's amazing. So after you got your first house, then you got the itch. How did you actually get into real estate?
Soon after that, I started looking into companies that would hire loan originators. So I got into loans first.
Hmm.
So I came across a company. I don't even remember the name of it now. That was hiring individuals, and they would train you, and at the same time they would show you how to get licensed, or they would guide you to get licensed. And it was sort of like a call center,
Mm-hmm.
but we were dealing directly with consumers, where we were taking their loan applications, letting them know what kind of documentations they needed to gather, and giving them all the information. And sort of like a loan assistant type of job.
Okay.
And we worked hand in hand with loan originators. And I think at the time you didn't even have to take an exam to be a loan originator. There was like an ethics class that you had to take.
Yeah.
So sort of you were like under a bank, and the bank umbrella, that they would license you automatically.
Mm.
And that's how I started in the business. And
Wow.
I basically left the job that I was earning more, and I took a lower paying job to get into mortgages.
No kidding.
Yeah.
Yeah. Wow.
Now that I think of it, I'm like, wait, that's crazy.
Yeah. I mean, at the time, it might have not have been like the best decision, but it worked out in the end for you.
It has definitely worked out. I mean,
Yeah.
being in real estate and mortgages has definitely, my God, like opened so many doors.
Yeah.
Like it's crazy what it's done. And I'm
Right.
so happy to have done it so early on,
Mhm.
because now I'm able to show individuals how they can also build wealth through real estate,
Yeah.
through buying your first home, through buying your second investment home, and then also maybe even doing flips. And Airbnbs came around, and also maybe doing Airbnbs. There's just so much that can be done with real estate.
Yeah.
I'm always asked, when is it the right time to buy?
Yeah.
And I tell people there's always a great time to buy. Real estate in itself is like one of the greatest investments long term, but then also short term. So it just depends what type of real estate investment you're doing.
Mhm.
Is it a rental? Is it a flip? Is it an Airbnb? Is it your primary residence? So it serves so many different purposes.
Mhm.
So ultimately, I think just getting informed, just getting educating, and working with the right people
Mhm.
that can help you get to your main goal.
Wow. I would definitely agree with that. In terms of actually raising your position, you started kind of like in a call center. I think that gave you a lot of experience in being able to handle all of the everyday questions that people have, right?
Yes.
How did you take that leap from, kind of being the loan assistant, loan officer assistant to becoming a loan officer?
I've in anything I do, just automatically I always push for more. I'm the type of individual that is not push a button type of guy.
Hmm.
I get fully involved in everything I do, even things that, I don't necessarily have to do. I feel the more I learn, the more I know, the greater the chances I have for anything that may come in the future.
Yeah.
Like I just like getting informed, be it real estate, be it mortgages, be it financial literacy.
Yeah.
So I just indulge myself in anything that I interested in.
Yeah. 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 That's great, man. Uh, Again, I think we got sidetracked.
I know.
It's easy to get sidetracked here sometimes. So what did you do? How'd you get into being a loan officer?
So once I was working in that call center,
Hmm.
I felt like it was repetitive.
Hmm.
So I wanted to do more. So then I researched other mortgage companies and I just asked around, what do I need to do to be my sole, to work for myself as a loan originator?
Yeah.
And I went from there. So I got with a broker at the time who owned a real estate office and a mortgage company.
Okay.
So I got licensed as a real estate agent. I was licensed as a loan originator and I was prospecting my own leads. I was cold calling my own prospects, my own clients,
Yeah.
doing follow ups, and I started generating my own business. And that's how I came into the industry early on.
Wow. And so at the time, you said that it wasn't required to be licensed to originate loans.
Yes.
Okay. So,
We
uh,
would work under like an umbrella, like under a bank. You would be licensed under your bank, and I think some banks still do it that way.
yeah.
Like if you work for like a regular retail bank,
Hmm.
they do have you registered with NMLS, but you don't necessarily have to be licensed. You're under like their umbrella, and they have their own training, their own ethics, their own tools and educational materials that you use.
Wow. Okay. So how long were you out there in Cali? How'd you end up in Houston?
I lived in Cali all the way up to 2006.
2006.
Yes,
So for most of your life.
for most of my life, I lived in California.
Okay. Wow. And so what were you doing out there in Cali? You started originating loans, you started rock and rolling. I'm sure you started making more money. And
Yes.
so at what point did you start investing in real estate? Like walk me through kind of like your life cycle of everything that's happened out there in Cali.
I started investing in real estate, I want to say maybe 2004 or 2005.
Okay. Right
L-
before 2008.
Yes,
Yeah.
right before 2008. But um so I was working with that broker that had the mortgage company and the real estate company, so we were doing it as a team.
Hmm.
And in doing that, the market started shifting a little bit in California. So we would buy homes at the auction. We would help individuals buy homes and flip. So we would help them finance the house.
Hmm.
We would connect them with builders and remodelers, construction companies to help them do the job.
Yeah.
And they would go ahead and then remodel the house and then flip the house. It was a time in California where the houses were appreciating drastically, rapidly, very fast.
Hmm.
But at the same time, the market started shifting a little bit. So with the house being so high in price, it was getting hard for people to qualify for homes.
Hmm.
So I started looking into other states like Nevada, like Texas, to help individuals not necessarily buy their first home, but maybe buy an investment home.
Hmm.
At the time where homes in California were going up in price, homes in Nevada and homes in Texas were very affordable. So and they still are compared to a lot of high price states.
California.
So
Yeah.
yeah, so Texas is still very affordable. You can come in with 20-25% down and essentially you can have the tenant pay for your mortgage.
Yeah.
In California, that's hard to do.
Mm.
If you buy $1 million home, you come in with 20% down, you're coming in with 200,000, still a $800,000 loan. Really hard to get $7,000 or $8,000 mortgage or rent
Yeah.
to cover your mortgage.
Right.
So you're still able to do that in states like Texas.
Right. Yeah, so I could see how investing just doesn't make sense out there in California a whole lot. I think it's more of an equity play out there then.
It's more of an equity play out
Yeah,
completely. I agree with you on that.
yeah. And so you started helping people out investing in Texas. Um, I'm guessing that you were still living out there in Cali.
Yes.
Okay. And
Yes.
so you started doing more business in Texas, I'm
Hmm.
assuming? Okay. Is that kind of how the door got opened?
That's it. I
Yeah.
started, we flew here just to see and survey and look what's available. With anything that I offer, I like to go all in,
Hmm.
and I too like to invest. So I came to Texas in terms of investing, but I already had a family.
Hmm.
So when I got here and I started visiting the communities, Katy was hot and popping, and it still is.
Hmm.
Sugarland as well, and the Woodlands. And the biggest thing about Texas was the school districts.
Yeah.
Everybody was so proud of KDISD being the number one school district. I think in that year it was like the best school district. So that caught my attention, and I decided, hey, what if I move my family for, you know, a different opportunity,
Yeah.
better school district, different community, and just to provide my family with a better upbringing.
Yeah.
And in California, I at the time my kids were in decent school districts. I can't say they were like real bad school districts. However, when I got to Texas, it looked just so much better.
Yeah.
And there's one big thing that I love about Texas is that diversity.
Yeah.
It's you don't only see people from one place, you see even from Latin America.
Yeah.
You see people from South America, Central America, from Mexico. So you see people from all over the world, and that I like that. I like
Yeah.
to be in a place where it's not just one-sided or one color or
Right.
one breed,
Yeah.
that it's a mixing pot, and I love that.
Yeah.
I feel that's what the US is all about. So
Yeah, I
that's
agree.
something that that I like.
That's one thing that drew my attention when I moved here too. I was like, hey, man, I like to eat, so shout out Agas Indian Pakistani cuisine. Oh
My
my
God.
gosh, bro, this place. If you want to try some good butter chicken, I'm getting hungry just talking about
No,
it.
I tried it. I tried it. I know.
It's Bob. So I'm like, dude, I like where else in the world could I live that I could have like all types of cuisines, and like Houston is
I
just
know.
for me number one.
Yes.
I've traveled a lot.
Yeah, I'm in Spring Branch, but we have nearby, we have Chinatown, and you're absolutely right.
Hmm.
You have every type of cuisine. And sometimes when I'm asking friends, where do you want to eat? And you start and they're like, I don't know. I go, well, what do you like? Italian, Japanese,
Yeah.
Vietnamese, Lebanese, like Mediterranean,
Pakistani,
Pakistan, like like
Greek.
yeah. And then they're like Mexican, Colombian, Brazilian. Like it's like
Yeah.
there's just so much.
Yeah, Venezuelan. There's a lot of
Yeah,
Venezuelan restaurants all
yeah.
dedicated
I
to.
mean, there's everything.
Yeah. Come to Houston. Man, that's awesome. So when was your first investment? When did you start investing in real estate?
My first investment was in California.
Okay.
Well, it started off with my primary residence,
Yeah.
and soon after I upgraded. I sold my first home that was like 800 square foot home, 2 bedroom, 1 bath.
Hmm.
I think it was like the ugliest house in the neighborhood. And I tell people this story because sometimes you have individuals that are looking to buy a house and they want like their dream home.
Yeah.
And I'm like, you know what? You may want to buy not necessarily your dream home, but like a step up home. And then you work on that, and then you buy another step up home. And that's how I started.
Yeah.
So I started with the smallest, ugliest house in the neighborhood,
Yeah.
but then I stepped up. And then after that second home, I've actually bought a duplex. So I had rental income from a property, and I lived on the other house on the same lot.
Mm.
And then I sold that, and then I moved to Texas, and then I had what I thought was my dream home at the time. Now I don't think I even have a dream home. I see real estate so different.
Yeah.
I think real estate in itself is my dream because I've made a career out of it, and I can earn a living, and you can lose it all, and I can feel like I can still start from scratch.
Yeah. You can teach a man how to fish, but you can give a man a fish, you can't teach him how to fish, right? So
Yeah,
you know
exactly.
how to fish in real estate now. Man, that's awesome, dude. So you do you still have any investments out there in Cali?
I don't have any more investments in Cali. All of my investments are here in Texas.
Yeah. Okay,
Yes.
cool. So you went all in.
Yes. Oh yeah. If
Yeah.
I left anything in California, I think I would have moved back.
Yeah.
Yeah, I
Okay.
mean, when you have roots in a place,
Mm-hmm.
and when people ask me where you're from, the first thing I think of is LA.
Yeah.
Yeah, I grew up in LA. I went to elementary school, junior high school, like that's home to me.
Mm-hmm.
And the weather, oh my God, it's
Oh,
unbelievable.
yeah. The weather's
Exactly.
incredible.
So when I
Yeah.
first moved here, I was like, why in the world did I move here?
Yeah.
I felt like it was hell on earth.
Yeah.
But the crazy thing is now I love it, and I'm like, I like this warmth. I like this feeling. So it's weird how sometimes I go places and it's a different kind of weather. Like Nevada has a dry weather. It's dry heat.
Yeah.
And I'm like, I miss that warm moisture. Or I go to California now and it gets cool in the morning and it's cool in the evening. And I'm like, where's my warmth?
Yeah.
You get used to it.
Yeah. Yeah.
Yeah.
It's hot and humid here most of the
It's
time.
hot and humid.
Yeah.
Yeah.
So when you got to Houston, man, when did you start? So let's talk about your company that you have right now, right? When did you get started with that? How did that come about?
It basically just landed. When I came to Houston, I joined a company called Champions Real Estate.
Okay.
And they had an in-house lender.
Mhm.
So it was like an easy move for me because I joined this real estate company at the same time. I held my mortgage license the preferred lender,
Mhm.
under the preferred lender. So it was like an easy move to me.
Yeah.
And I literally had a little cubicle, and realtors would come in,
Mhm.
and I didn't like the heat in Houston, so I didn't like going out to show properties.
Yeah.
So my license was just inactive. I
Yeah.
was just holding my license because I wanted to get to know more real estate agents, and I wanted to get to know more people. So I had to be around a certain environment. And I had my little cubicle as a loan originator as a preferred lender at this real estate office, and I got to meet all these real estate agents. And a couple of years later, the broker had to move,
Mhm.
so the opportunity just came to me, and I took the opportunity, and I just started my own branch. As soon as that broker left, I decided, I don't want to go join anybody else. So I decided to have my own branch, and I started to build my team.
Mhm.
But there was already loan officers that were under that prior broker that decided just to stay with me. And
Mm.
I've never prospected loan originators. I never look. It just kind of happened, and the opportunity presented itself, and I just took the lead, and I said, you know what, I'm just gonna go all in and run with it.
Yeah. When
Yeah.
was that?
This was, I want to say, like 2008.
2008.
Uh-huh.
Really?
Like 2008.
Wow.
Yeah.
Okay.
Or 2010, right around there.
Yeah. What was the big great collapse that happened in 2008? How was that like in Houston?
The housing crisis.
Yeah.
Eh, you know, it was real bad all over the place.
Yeah.
But I feel it was easier in
I
Houston.
feel the same way, right? We're
Yes.
very diverse here.
We're well, not just because we're diverse.
Economically, I mean,
Yes.
financially.
Financially.
There's so many different economies
Industries.
here. Yeah.
Yes.
Yeah.
Yes. So that helps a lot.
Mhm.
But not just that, the low cost of living,
Mhm.
the lower house prices, and the abundance of land.
Right.
So it's a combination of things. So we were still building. Everybody else, they weren't. I mean, Texas never stopped building.
Yeah.
And certain places, the builders just left town.
Right.
Yeah, they just picked up their tools and they just left communities.
Right.
So it did impact the economy, but we were still moving. It's just at a slower pace.
Yeah.
And it also brings out other opportunities because there's individuals that already had equity in their homes. There's people that had already invested. And when you have this type of things happen, then other individuals rise up and they're able to also profit.
Mm-hmm.
So in terms of having downturns in the industry, I don't think is necessarily a bad thing. Sort of like now,
Mm-hmm.
where the market has shifted to a buyer's market,
Mm-hmm.
it's bringing up great opportunities for buyers.
Mm-hmm.
And during COVID, buyers couldn't buy a house.
Yeah.
So it's a give and take thing.
Right.
So we kind of have to adapt and kind of have to look at those shifts and see how it'll benefit that consumer that we're looking for,
Yeah.
or how will it benefit us, or how do we help a community thrive during a moment that is not so good.
That's really greatly put, man. I think if you learn to adapt, then you learn to overcome, and you learn to position yourself in an opportunity in a way that you're able to win.
Yes.
Right. I think that's a great mindset. In terms of you, so you started in 2008, the company. What was that like to grow that company, to serve, to get to being able to do 100 loans a month, to have an office
A
with,
year.
sorry, sorry.
That's a great goal.
That would be an amazing goal. 100 loans a year. I wrote down 3 million a month. So 100 loans a year, 3 million a month. I mean, this is a great accomplishment to be able to do. And so, what do you think it took to be able to get there?
Tenacity, persistence, not giving up, like ganas.
Mm-hmm.
In our industry, uh, my wife and I work in the same industry.
Yeah.
So if we don't produce, we
Yeah.
don't produce. So there's no income coming in.
Right.
So there's no if and buts about it. You either win or you win. You know.
Yeah.
So
What does your wife do?
well, she helps me at the office and she helps me process the loans.
Okay, nice.
Yes.
Yeah.
Yes.
Family business then.
Family business.
I love it, dude.
Yes,
I love
sir.
it. Before we started filming, you talked. I know we're running short on time, so I really want to talk briefly on the loan products that you have, because I think you told me an earned equity program, and I think that's absolutely incredible for anyone that's listening to this. I think they could benefit a lot from the earned equity program.
Yes, we have a variety of programs. So we do all the traditional full qualifying programs. We also help individuals with non-QM, those who don't qualify traditionally. But that earned equity program is a great program that I started servicing maybe, I want to say, 6 months ago. And looking for a program that could help individuals that don't qualify any other way,
Yeah.
and that could still come in with a low down payment, 3.5. I came across an earned equity program. And initially, I would not service the program because some banks use it as a lease to own. However, I've kept researching and I found a lender that has legitimized it, and they've made a purchase agreement that's recorded at the county. So it's a program that serves a great purpose. There's an intermediary.
Yeah.
So there's like an entity. There's a company that has the loan, but they'll do sort of like a wraparound. Well, they'll service the loan and they'll lend the individual the same amount what they purchased for. They just have to come in with 3.5% down, and they'll provide a loan that they'll service for the term. And at closing, they record a document that serves as their deed, which is a purchase agreement. And
Right.
the buyers earn equity. The buyers can refinance. The buyers can sell. They have all the authority as an owner.
Right.
So it's the great product for an individual that doesn't qualify any other way. And the rates, they're decent. I mean, it could be anywhere from 7 to 9%.
Yeah, it's not bad at all.
It's not bad at all.
Considering where rates are
Yeah.
hovering at right now, they're what, like in the 6s, 7s?
Yeah, basically.
Yeah, I mean,
That's
it's basically there.
that's
So,
it. Yes.
uh, I find this structure really interesting because, and so for just to like give a little bit of background into how loans normally work, anytime the lender goes and funds a purchase, there's two main documents that get recorded. There's a deed and a deed of trust, right? So the deed is the ownership of the property, and then the deed of trust is the interest of the lender that's putting up the capital to for the borrower, the person that takes the deed, to take possession of the property. In this case, what happens with the purchase agreement? So the purchase agreement gets recorded. So does the deed stay in the previous owner's name?
The deed doesn't stay in the previous owner's name, it stay in this company's name, in the company that's servicing the loan for the home buyer.
Oh, I see. Okay.
Yes.
Okay. So it's like if they is this company is basically purchasing the property
Correct.
and then financing it to the individual.
To the individual.
And then
Correct.
they file a purchase agreement to the individual, and then that's how it
Yes.
gets recorded.
And that gets recorded in the county.
I love it.
Yes.
How does let's say the refinancing process for the individual?
Like any other loan,
Yeah.
you're able to pay off early, so it doesn't have a prepayment penalty.
Mm-hmm.
You're able to refinance if you're able to refinance out of it, and you're able to sell. So you have 100% ownership on the property,
Yeah.
as long as you don't default, of course. But that's like any other loan.
Right. Yeah.
Hmm.
And so, what is you call this a bridge loan, right?
I call it a bridge loan. I present it to individuals as a loan because most people don't qualify for a loan because their income is too low, because they don't report enough income is what it is most of the time,
Mm-hmm.
because they're self-employed, because they're 1099, or because they don't report taxes to the IRS, or a lot of individuals that earn cash and they don't report all their cash.
Mm-hmm.
So there's different ways of qualifying. We can verify their income through 12 months bank statements. We can verify their incomes through a profit and loss statement from their tax preparer or their CPA. And there is a credit check. So as long as the credit score is over 580, sort of like an FHA loan.
Mm.
And it also allows them to come in with 3.5% down.
That's incredible. You say you're doing some loans right now with some pretty prominent builders.
Oh yes, we're
Yeah.
doing some loans with Lennar, with Meritage Homes, New Century, and DR Horton.
Wow.
Yes, and specifically the Earned Equity Program.
The earned
And
equity
we're
program.
closing on 2 today.
You're closing on two more today.
Today,
That's
yes.
that's incredible. I think this can provide a lot of opportunity for a lot of people out there that are looking to buy a property and that may not qualify by the traditional means. You know,
Yes.
there's a lot of red tape,
A lot.
a lot of
Yes.
underwriting to be able to qualify for a loan. But if a family wants to go and buy a property, it takes 3% down,
3.5% down.
3.5% down.
Yes.
It takes over 580 credit
Over
score.
580 credit score. And we do have to document income. It could be a verification of employment. It could be a profit and loss statement from the tax preparer or the CPA. It can be 6 months to 12 months of bank statements. So we can document income alternatively.
Yeah,
Yes.
that's incredible.
And we can also help individuals with an ITIN number.
With an ITIN number.
Yes, with the exact same conditions.
So it's basically like an FHA loan.
Mm-hmm.
In a nutshell, it's almost like a FHA loan, but for the rest of the community that may not be able to qualify
Yes,
by normal means.
correct.
That's
By that don't qualify traditionally, full documentation with their W-2s, with their paycheck stubs and such.
yeah. I mean, there's a lot of contractors out there that
A lot.
earn a ton of money, and then
Yes.
but they report maybe because of losses or whatever that
Mhm.
the actual profit doesn't look good at the end of the year. So they could definitely qualify for this.
Definitely. And there's a lot of cash earning individuals that don't report any income.
Mhm.
So it's a great product for those individuals.
Yeah.
Yes.
What other loan products do you have that? I think this one's probably one of the best ones you may have right
I
now.
think this is a great program, but we also help individuals like new starting up builders.
Yeah.
Somebody owns a lot and they want to build a home on their lot, and not necessarily as their primary residence. If you want to build a home to sell, we can help individuals with a construction loan as well.
Is it kind of the same terms, or would it be a little bit different terms there?
It's kind of the same terms, but we have two different avenues.
Mm-hmm.
So we can do it on the commercial side and we can do it on the residential side.
Mm.
So we usually look at the financials to determine what's the best avenue for each individual. And that's what we like to do. Essentially, I have a lot of people calling me for either our non-QM product or our earn equity product. We take full loan applications because we want to be able to see what your goal is, and we want to be able to guide you and educate you and provide you the right information. I'm not going to make the decision for you. We are only going to give you all your options. And sometimes we don't know it all. But once we take a full loan application and we like to gather tax returns, paycheck stubs, profit and loss statements, if there's something you don't have, well, you don't have. You just let us know, hey, that I don't have. You don't want to conceal any information, because the more information you provide to us, the more options we're going to be able to give you.
Yeah.
So essentially, I pride myself in being a loan originator that's looking at your best interest, but that's going to give you all your options, all the tools you need to succeed.
Yeah. I think that's a really good approach to take, because then you can act even as a consultant,
Yes.
right? And be able to guide people. What have been some things that maybe you've seen so let's say an individual comes to you and they think, oh, maybe I don't qualify, but then they present you with all of their documents, and then you're able to provide them a lot more options that they thought they had. Do you see that often happening?
I see it a lot.
Yeah.
Self-employed individual.
Yeah.
It comes to my mind a lot. Truck drivers. Depending on all their write-offs, they essentially can have a very low net income.
Mm-hmm.
But there's some things on the tax return that sometimes we're able to add to the net income, like depreciating income. There's also mileage. So if we don't take all those things in consideration and we're only looking at the net income, well, essentially they might not qualify traditionally.
Yeah.
Full documentation. However, we have different loan options. So it doesn't mean that you don't qualify. You may not qualify traditionally. You may qualify non-traditionally. Non-QM product is what we call it, non-qualifying mortgages.
Right.
And then if all else fails, then we have the earn equity program. But you don't have to take any of those, or you don't have to take the non-qualifying. You don't have to take the earn equity. You can decide, hey, let me make the changes that I need to make to either my credit, to my income, or to reporting accurately, so I'm still able to qualify traditionally. Most people that are self-employed, they would choose to continue to file their taxes the way they do, because they know that they're going to have a bigger profit doing that, and they don't mind paying an extra percent in interest rate for a loan, because at the end of the day, they're going to save more money paying an extra interest in a loan. They're then filing a lot more income and paying 20% to the IRS.
Yeah.
So it's a give and take thing.
Right.
At the same time, if you don't own a home, you're already paying a mortgage. It's just not your mortgage, it's mine, or it's yours, it's somebody else's.
Yeah.
You know? So when people ask me scenarios, I don't necessarily like scenarios, because we like to see the documentation so we can provide accurate information. We don't like to assume, or we don't like to provide information on the unknown, because there could be so many different variables.
Right.
So once we have all the documentation, once we have everything, we can provide either steps to homeownership, or we can provide alternative programs, or we can provide our bridge loan, our earn equity product that essentially is so easy to qualify.
Yeah. Yeah, I think the earned equity is something that really sets you apart. I don't think I've ever heard of that. So congrats on being able to be able to offer that. It's amazing.
No, it's a great product.
Yeah.
And I tell people it might not be for everybody, but it's a great program that offers an opportunity that to everybody that is not able to qualify any other way.
Yeah.
So that's not the first product we go to. That may be the last product we go to. But in order to get there, I want to make sure that there's nothing else available.
That you have the full information.
Yes,
for
that
them.
we have
Yeah.
full information, because we want to provide everybody with accurate and most informed information.
Yeah, that makes sense. Well, I think for anyone that's watching this, I think I'd be, jumping at my chair or wanting to know about the earned equity program. How can people reach out to you to find out more about this program?
Well, they can call my office directly. Our number is 832-369-8888. I'm on Instagram as Josue Reyes Banker. Give us a call, reach us out. We're happy to help.
Yeah.
And we thrive, and we take a lot of what's the right word? We pride ourselves in not just taking a loan application, but informing, educating, guiding. You mentioned early, like, act as a consultant.
Yeah.
We're already consultants.
Yeah.
And we do it out of our own free will, because I feel it just reciprocates.
Yeah.
The more we can do for somebody else, I feel that the more that's going to come back to us. And we don't do a lot of prospecting. We don't do a lot of advertising. All of our business is just through word of mouth, just partnership referrals. And I love to meet like-minded individuals that are looking to help, to guide, to inform. In this industry, a lot of the time, it's all about the money, but I feel it just overflows when you're able to give back, where you're able to offer something of value,
Yeah.
when you're able to do something out of just the goodness of your heart.
Yeah. Very well said, sir. Very well said. Well, I wish I could keep talking to you, but I know you told me before that you have to get to a closing. You have a meeting. I know you're a busy man. So anyway, thank you so much for being here. Thank you for being a guest on this podcast. Is there anything else that you'd like to share just wrapping up here?
I appreciate the opportunity. We'll have to do a sequel.
Yeah, let's do it again. Maybe
Definitely.
now I know. I won't invite you at the end of the month. I'll invite you. What's the best time? Beginning of the month?
Yeah,
Mid-month?
like the second week of the month
second
is
week.
the best time.
Okay, all right. We'll plan a little bit better next time.
All right, brothers. Great being here.
Thank you so much, brother. Appreciate it.
All right.